we're still having big cap stocks reporting for earnings season after last week's blockbusters of Microsoft and Alphabet. And this week, we're seeing several more of the largest companies that are in the S&P 500. And one that I'd like to add to the Magnificent Seven, if I could, Berkshire Hathaway. They're reporting always on Saturday. I don't know how they got that gig. How did that happen? But they technically that's in this week. So I'm going to cover them as well because that stock's having a breakout year here in 2024. So what are the other big cap names you should be watching this week? Let's dive right in. Okay, the first one out the gate shouldn't be a surprise, but it is Amazon. Of course, ticker AMZN, of course. I own it in my own personal portfolio. I know many of you do too. It's been a wild ride the last couple of years, and it's gotten a lot more accurate on the earnings reports. You can see there's now 5 big beats in a row that have been put together. A lot of that is under the regime of Jassy, now the new CEO. So maybe he's turning it around in terms of what he's telling the analysts so that they can get it right on this earnings miss or beat on the earnings estimates. But we now have 5 beats in a row and the shares have taken off. You can see they've been retaken that all-time high there. They're now off a little bit off those highs. Year to date, they're up 18.8%, and they have a PE of 44. Now, Amazon's never been cheap on a PE basis, even when it sold off in 2022, but a PE under 50 is actually pretty affordable for Amazon historically. So what will that mean on this earnings report? And can we see another beat here and maybe another breakout in the shares? We'll see. This is one of the now few of the Magnificent Seven that does not pay a dividend. Are we ever going to see a dividend now with Amazon? I never thought I'd see the day with some of the others, like with Meta and now Alphabet also paying a dividend. Will Amazon follow along? We will see. So that's Amazon, AMZN. Then we got a few big chip names going this week. And the first one is going to be Advanced Micro Devices, AMD. What a pretty earnings surprise chart. No misses in the last 5 years. These are smaller beats, though. The small little green arrow. Okay, so that was a meet last quarter, but it still counts for purposes of the track record. And then they continue to just barely beat on most of these quarters. So that's really good earnings management of the estimates with the analysts to really let them in on what is going on at the company. And so they can get very close to what it actually is going to be. Now you can see these shares rallied to new highs here in 2024, but they've taken a big turn recently. Is this a buying opportunity in these shares? Over the last 3 months, the shares have tumbled about 10%. So we have a correction here, a 10% pullback. Should you be buying here? You're not buying if you're a value investor, but we know that with this stock, with NVIDIA and some of the other chip names, forward P is now at 45.7, but the PEG ratio is just 1.8. So that's on the lower end. It's not quite in the value range, but it's still on the lower end. So we'll see. We'll see what happens on this quarter, but we're all going to be watching Advanced Micro Devices, ticker AMD. Then we're going to return to, I guess they're fintech. Would you call them fintech? I kind of would. MasterCard. Visa's already reported. They beat again. MasterCard also with a similarly outstanding earnings surprise track record. Just that one miss in 2020. Visa, as you know, has no misses in the last 5 years and since their 2008 IPO. So that's a crazy track record, but MasterCard also similarly outstanding. These are small beats as well, but a beat is a beat. And so we'll take it. We'll take all that green. So what's it looking like with MasterCard over the last year? The shares are up 20.5% year to date. They have come down off those all-time highs, up just 7.3% now year to date. So are you getting them on sale? Well, trading at 32 times. So a little more expensive than what Visa is at, but not as expensive as it got back here in 2021, where then the shares had to go sideways while it waited for basically earnings to catch up. And so earnings continue to grow, but the shares did not. But now some people are thinking that there's some value in there again because the shares are starting to take off as we see here in 2024. So I'm going to be watching this one, but I have a feeling it's going to be another solid quarter like we have seen from this credit card giant. So that's MasterCard, ticker MA. Then we're going to get to the other big kahuna this week, which is Apple, the other Mag 7. AAPL is the ticker there. And you can see it too has a great earnings surprise track record. Just that one miss in 2023. But these shares have been trading somewhat sideways for a couple of years. We had some of it in 2021, 2022. So not as big of a sell-off as some of the other Mag 7 saw, like Amazon, but just a little bit of weakness. And then we did have a rally last year, but weakness here in 2024. So over the last year, they are up 22%, but now, they are in the red here in 2024. So that's a little unusual situation for one of these Mag 7s. Only Tesla, the other one that's in the red here in 2024. PE is now at 25.9%. Oh, wait, I take it back. That was Berkshire Hathaway. That is up 22.3% over the last year. Apple 1 year is now down 0.2%. So sorry about that. I'm getting my numbers mixed up. Apple now down 0.2%, but that's not helping Berkshire Hathaway, which we're going to talk about in a minute because they own such a big shares. But Apple at 25.9 times. So it's gotten a little bit cheaper while it's moving sideways here, but not altogether cheap. At least it's not back over 30 times, which we have seen recently. So still expensive for the growth rate. Does pay a dividend, yielding 0.6% here for Apple. So it has paid a dividend for a while now. So there's not going to be a surprise on that one unless it, suddenly decides to do some kind of big increase or something. Over the last 3 months, these shares are down 9.3%, in addition to the 1 year down 0.2% now. So struggling a bit on the shares, but if it gets cheaper, could be an interesting play here. But for many value investors, Apple just still too expensive at these levels. And then we're finally going to finish it up with Berkshire Hathaway, which I was just talking about inadvertently a minute ago, which has Apple in its equity portfolio. It is the largest position in Berkshire Hathaway and one of the four prongs of Berkshire Hathaway's business, in addition to its railroad and Geico. Apple is one of the other big prongs there, as I said, prongs of its entire business. So what is this stock looking like? Even better than Apple, actually. It used to be the other way around, that Apple was such the much better performer, but Berkshire Hathaway busting out to new highs this year. And I mentioned up 22.3% over the last year. It's beat 3 out of 4 quarters now. So it kind of has this iffy track record, but Berkshire Hathaway doesn't have many analysts covering it. It's maybe a little too boring for an analyst to just cover one big conglomerate. It covers all these different areas. So who would you have cover it? So I think Zacks only has like 2 or 3 estimates on Berkshire B shares for that reason. So it's not as widely covered as you might expect. But it is coming off a big beat last quarter, 120%. What will happen this quarter? This is going to be interesting. It's not altogether cheap anymore. Its forward P's at 21.7 times now that it's hitting these new highs. PEG ratio of 3.1. So you can see it's not that cheap. But Berkshire Hathaway owns a lot of old economy companies within its company portfolio. So what are those doing right now? What is the railroad BNSF doing? It owns a paint company, jewelry stores, furniture, Dairy Queen. We're going to find out all of this and more on next weekend when this finally reports. So I'm going to be tuning in. I know many of you will be too. The upcoming annual report, that's coming up soon too. So you're going to want to, or the annual meeting, you're going to want to tune into that. That's always quite the show. And this will be the first year without Charlie Munger, unfortunately, since he has now passed away. So you want to tune in to all this stuff with Berkshire Hathaway. It's one of the top 10 largest companies now in the S&P 500. Who knew it would eventually grow into such a mammoth company? But here we are, 168 billion in cash on the books. What will it do? Will it report a dividend? Buffett hates dividends, but maybe he'll go to the dark side. We will see. But there's a lot going on with all these companies. As I mentioned, we're going to have several of the top names in the S&P 500, also including Eli Lilly reporting this week, ticker LLY, the weight loss drug playing a big part over there. They are also in the top 10 of the S&P 500 now, as that stock has soared. So you want to tune in to get all of our charts here. I'm bringing them to you every week here on YouTube. Just go to Zacks.com/YouTube to get them all. And I'll be tweeting out more charts on X all week long. So some of these I'll tweet out as well, but be sure to tune in to my Twitter feed, just at Tracy Reineck, to get more of these stocks. And as I mentioned in the beginning, I own Amazon out of these stocks. I don't own Apple or AMD or Berkshire Hathaway or MasterCard, but I'll be tuning in and you should be too. So be sure to tune in next week for more Earnings All-Stars charts, because I'm bringing them to you all throughout earnings season.